Hi guys, so let me show you why the MACD is the most profitable indicator you're going to get out there. So I've simplified the MACD strategy and I'm going to show you everything step by step. Very easy and simple. Let's go. Kindly subscribe to the channel, hit the bell button, like the video, and let's build a community. So I'm out here on my chart in TradingView. This is pound yen. All right, so first of all, I'm going to load up the MACD on the chart and I'm going to explain the MACD before we start getting into what to do. So to load up your MACD, come to indicators and just type MACD. So the full name is Moving Average Convergence Divergence. It's got a star here because it's one of my favorites. So the star is on it to mark it as my favorite. Let me load it up. So it's loaded up. So let me close this window. So this basically here is your MACD. I'm going to make it a full chart so it's easier to look at. So I put it there. So this is our MACD now. So I'm going to explain all the parts of the MACD. So let's take it from here. So the MACD, okay, style, yeah. So the MACD has four components. So I'm going to show you each and every one of them. Let me start from, so this yellow line is called the signal line. It's right here. It's called the signal line. So that's the signal line. And this blue line is called the MACD line. I'll tell you what all of them does in a bit. The other part is called the histogram. So this is the histogram. I'll take it off. And then the other one is the zero line. So I'll show you everything and what it does. So I'm putting all of them together now. Yeah. So what are you supposed to do with this? I'll just make it simple. So this middle here, this is the zero line. That's the center of the MACD. So when price at the bottom of the MACD, this area here, when price is here at the bottom, this is where you buy from. When price is at the top here, this is where you sell from. The condition to sell and buy is as follows. You buy here at the crossover of the MACD line and the signal line. When the MACD line crosses the signal line upwards, and it's all happening at the bottom of the MACD, that is when you buy. So this zero line here is in the middle. So we buy at the bottom and we sell at the top at the crossover of the MACD and the signal line. It's quite very simple to understand. The next thing is the histogram. So this is the histogram here. The histogram gives you, let me put it this way. So when the distance between the MACD line and the signal line is widening, the histogram gets taller and big. It gets taller. Let me put it that way. So in here, yeah, so there's a lot of momentum in the market. When it's closing up, it means we're getting close to a reversal. So I'm going to bring on the charts now and everything is going to be clearer. So yeah, so this is how your chart will look. The MACD is going to be at the bottom right here and your chart is going to be up here. Yeah. Yeah, so when we come to the chart, this is how it is used. Let me put this here. So if you look at this place here, the MACD crossed over here. The MACD line crossed over at the bottom here and it's below the zero line. So from here, this is where price was. So this is going to be a very nice buy. You buy from here, you put your stop loss below the swing low down here, the swing low. That's what I'm going to say. So this is one. The other one I can't see is there's a crossover here, which is here, and there's another crossover here. So that is looking like here. Let me put it here. and also this zone here. So one crossover, the other crossover. This is likely, if your stop loss is here, it's likely to take you out of the market. But if your stop loss is a bit far, it's okay. If you get in here, you're fine. It's going to run you all the way down here for before you come out at the next support or you come out at the next crossover. So basically, this is the basic understanding of the MACD. You buy at the bottom at the crossover, you sell at the top at the other crossover. Yeah. So one important rule is this works perfectly in a trendy market. It does not work well when market is in a range. Let me show you. So look at this, for example. Look at this space here. All these things happening here. Price is stuck in this range here. So you don't know what the MACD is doing. It's all over the place. It crosses here. The histograms are low and all of that. You don't want to be doing this with the MACD. So with this range here, it's out. What we're looking for is a trendy market. So let me take all of this out. Now let's move to the next topic of the MACD, which is we call something false signals. So the MACD also gives false signals, meaning the MACD is telling you to sell, but price is still going upwards. Let me look for an example. Here it says we should sell, but price went down a bit, so that's cool. Here it's telling us to sell. So if you look at here, let me mark it down. Let me bring price down a bit. So look at this crossover here at the top here. So it's telling us to sell. Price did went down, but what did you see? It's still hanging around the same region. It's not really going down like it's asking us to do. So these sort of situations are what we call false signals. Where the MACD signals a sell, but price is still going up. The MACD signals a buy, but price is still going down. So to solve that problem, the solution is we defined a trend and stick to that trend alone with the MACD. So we define what is an upward trend and we define a downward trend and only trade in these circumstances. That's all we do. So what we're going to do now, I'm going to put on a moving average, EMA. So I'm just going to type EMA here. Yeah, moving average exponential. So now it's put on a moving average. I'm going to go here to the moving average. I'm going to make changes to the moving average. So by default, this is the 9th moving average. I'm going to make it a very big one. I'm going to make it the 100th moving average. Yeah. So with this moving average, it shows you when price is in a trend. For example, from this part of the chart, from this part going up here, price is actually going up here because price is on top of the moving average. So all we are looking for from this part to this part is buys. So we're going to have our eyes fixed at the bottom of the zero line of the MACD. When there's a crossover at the bottom, that is where we buy. It makes the strategy so perfect, I'm telling you. So now that we've identified this trend, price is above the moving average. All we have to do is look for the MACD line to cross below the zero line. So for example, this cross here, this is the zone it crossed. This is the zone it crossed. So this is a nice buy. And then we leave it to keep going. We leave it to keep going. Yeah, anyway, but I guess everybody gets the concept. There are situations where people also use the 200th moving average. It's all about finding which range you want to use to define your trend. So I'm just going to show you how that also looks like. Moving average. Yeah, here we go. It's pretty much the same. price is stuck above it. Yeah, so basically you can use either the 100 moving average or the 200 moving average. Both of them are solid enough to give you an idea of the trend you're in. Yeah. I'll just move on quickly. Also, one more thing. People also try to get more confirmation. So when price has met all the requirements for the MACD, they also want to get another confirmation just to be sure. So mostly some people also use the RSI or the stochastic just to confirm if it's a fake signal or not. So in our case, we're using the moving average. However, in case you want to use the RSI or the stochastic, let's say the stochastic, for example, I'll just show you quickly. So you come on indicators and just type, stochastic. Yeah, so it puts the stochastic below the MACD. So let me expand it a little bit. What this also means is, so this white line here is the top of the stochastic, and this one is the bottom. It's the same way as the MACD, is quite close. So you only sell at the top and you only buy at the bottom. So when all the requirements are met with the stochastic, you also have to make sure price is above the oversold and the overbought areas before you jump in and buy or sell. So you buy from here, and this is the oversold area. You sell from the top. This is the overbought area. I would have a separate video about the stochastic, but I personally recommend the moving average, either the 100 or the 200 moving average, to define your trend before you use the MACD. It's only for trending markets. I think I've covered almost everything about the MACD. Yeah, so thank you guys. Subscribe to the channel. See you on my next video.